This video is going to tackle the main issue that most beginner traders have, and that is what you call analysis paralysis. So essentially, what that means is you learn a large number of different concepts, right? And because you learn that large number of concepts, you have this idea that you have to use every single concept you learn. Otherwise, there was no point in learning that concept. And two, you think that the more concepts you learn, the better your trading will be, right? Because more concepts equals more confluence, and more confluences equals more answers as to where price is going to head to. But that is simply not true. And instead, if you think of it in that way and you use as much concept as you can, that is where you would get what you call analysis paralysis, right? Because you use so many concepts, there will be differing confluences. That means in a bearish market, not every single concept is going to tell you to have a bearish bias. Vice versa in a bullish market. There will be conflicting confluences because of the amount of concepts you use, right? And that is essentially why it's called analysis paralysis. You use so many concepts, your analysis gets fogged, and you don't have a clear sense of direction as to where price is going to head to. Hence why, in this video, I'm going to show you that all you really need is a couple of concepts. It all comes down to this, right? The main idea behind trading is identifying how the next candle is going to open and close. Once you're able to anticipate how the next candle is going to close and open, that is where you get your bias, essentially. So if you get a bearish bias, you're going to favor shorts. If you get a bullish bias, you're going to favor longs. The only reason why we drop down onto the lower time frame is to refine those entries to get a higher risk to reward ratio. But that doesn't mean you can't just enter in shorts straight away based on how you anticipate the next candle to open and close. Because yeah, imagine this was a daily time frame. Going back to here, price has a market structure break to the upside. This candle has a bearish closure. You could literally enter off of here and stop loss above here, for example, because you're anticipating for this bearish candle that came back into this imbalance to stay respected. This imbalance should ideally stay respected because you had this market structure break. So you could just enter off of there and then wait for the next couple of candles to hit your take profit. That's as simple as it gets. The only reason why you would drop down to the 4 hour, 1 hour, for example, and so on, is to refine those entries. Because on a daily, as you are anticipating for your next candles to print bullish, after this bearish candle respects this imbalance in a higher time frame, aka in this daily time frame, bullish market structure after you had this market structure break, is because you're simply refining your entries to get a higher risk to reward ratio. So here we entered off over there, stop loss below there, and take profit at the original one, you would have almost doubled your risk to reward ratio, right? As comparison to if you just entered off of here, right? That would be a 1 risk to reward ratio in comparison to a 2 risk to reward ratio. So that's the only reason why you even drop down onto the lower time frame in the first place, is to simply refine your entries. So that is the main goal you're trying to achieve when utilizing trading concepts. It sounds simple, right? And indeed it is. That's why you don't have to overcomplicate your overall trading with a large number of concepts. You only need a small handful of concepts that fit your trading plan and your trading style to determine how the next candle is going to open and close. So, if we have a look at a trade recap that I took earlier this week on Monday, you will see how simple the trade and overall analysis actually was. Right, so if I replay back to Monday, here, Monday was the day I took a long on EU. The reason why I took a long on EU is because on DXY, here, on the daily, you had a market structure break to the downside. It's as simple as that. Market structure break to the downside with heavy displacement. That means on DXY, I would be favoring bearish market structure. Even though Monday had a bullish closure, during London and the start of New York session, DXY was heavily bearish on the 1 hour. So that still gave me opportunities to long on EU. It wasn't until later on in the day that you had that bullish push to the upside. Hence why you had this bullish candle closure. But if you look here, before I anticipated for this bullish candle closure, dropping down to the hourly, so this is where you had that bullish price action. And you didn't have that market structure break to the upside on the hourly until it took out this high, which happened past London close. So you can see here, going into London and New York, we had bearish price action. What was my idea behind this? Here, hourly, our daily bias was bearish. So the hourly had a bearish market structure. It aligned with your daily bearish bias. What does the hourly do here? During London, it sweeps that high. That is a buy side liquidity sweep. Upon sweeping that high, the next hourly candle has a strong bearish movement, disrespecting this discount array. So what does that mean? The hourly is still supporting for bearish price action. Another confluence. So you could see here, all I simply used on your daily time frame was one market structure break. That was the only concept I used, with displacement if you count that. But essentially, every time you have a market structure break, you want to see displacement regardless. And then I dropped down into the hourly. What are the two concepts I used? Simply a liquidity sweep and a disrespect of a discount array. It doesn't get any more complicated than that. And here, this is your trendline liquidity, low resistance liquidity. As you can see here, there is a number of failure swing lows. So each swing low, they fail to take out the previous one. What does that do? That builds up a trend line of sell side liquidity, which becomes your low resistance liquidity. So when price retraces back into this key premium array level area, I would anticipate it to mitigate any positions here and distribute it lower to take out this sell side liquidity at least. Because it's the start of the week, I wouldn't necessarily anticipate it to have a large downward move, because as you know in hindsight, it has a manipulation to the upside before that downward move to create the upper wick of your weekly candle. But that is something we will get into more detail in future videos. But here, this was my immediate target, this low resistance sell side liquidity. Because price disrespected this discount array, that means on the hourly, I am still bearish. This is one large bearish order block, playing price out. The next hourly candle is where New York session happens, 8 AM New York time. Because we have come back into this bearish order block, and as you can see here, the bodies are respecting the 50% level of this bearish order block. That means I have heavy confluence for price respecting this premium array. Again, all I'm utilizing is disrespect of discount arrays and respect of premium arrays. Because I'm anticipating for this premium array to stay respected, that is where I will look for this to be my next drawn liquidity. Hence why, from here to here, this was my long opportunity on EU. Because what price simply done here is mitigate more short positions before distributing it lower. So, because that is the case, right, if I play it out now, you can see it takes out that sell side liquidity with ease. And then it was only then, after taking out this sell side liquidity, was where you had that movement higher. But like I said, this move lower to take out that sell side liquidity was simply my low on EU. What does that look like on EU? So you can see here, Monday was slightly decorrelated with DXY because Monday had a bullish closure. Whereas DXY, because we had a bullish closure on Monday, EU you would have wanted to see a bearish closure. But instead we had a bullish closure, which is fine, it happens. That's why you have your lower time frames to refine those entries. Essentially on EU, in line with DXY, if DXY is bearish, EU should ideally be bullish. And it does so. Daily, market structure break to the upside again. Daily, all I'm simply using is market structure breaks and displacement. That is enough for me to have a solid idea of where price is going to head to on a daily. So that means my bias on a daily is bullish. If I drop down to a lower time frame now, going into Monday, this is what price has given us. Monday, we are still in steady bullish order flow. We had this rejection block here that price came back into, respects it, and here EU is continuing higher. So again, respect of discount rates, disrespect of premium rates in the form of this swing high, that becomes your market structure break. Not only that, but this opening gap over here is also considered a discount rate. You have a full body closure past that discount rate. If you look here, again, you had a sell side liquidity sweep in line with DXY's buy side liquidity sweep, if you remember. So you can see how I'm only using two concepts on my hourly, right? Respect of discount rates, disrespect of premium rates, and liquidity sweeps. Those are essentially the main two concepts I use. I'm not overcomplicating anything, because that's all you really need to have an idea of where the hourly is going to head to, in line with your daily bias. So again, after you had this market structure break to the upside, so New York is the next hourly candle. You have this bullish order block now, in line with DXY's bearish order block. Here, you have resting liquidity above here. This is your trendline liquidity, relatively equal highs. So what does that mean? That means, because we are respecting this bullish order block over here, the 50% level of this bullish order block, the bodies are not closing past it. So that's showing you heavy confluence for a respect of this discount array. So this is where I would drill down onto my execution time frame. Because here, you can enter off of here, right? Stop loss below there, take profit above here. But you would be 1R or a little less. So that is why you drop down to a lower time frame to refine those entries. 5 minute. It's so simple here. You just market structure shift to the upside. And again, discount arrays being respected, premium arrays being disrespected. So that means 5 minute is aligned with your hourly now. It's showing respect at this key hourly discount or ALAV in line with your bullish daily bias, which is inversely correlated with DXY's bearish bias. So it seems like there's a lot of confluences going on, but in reality, there's only 1 or 2 confluences. 5 minute, market structure shifted upside. My entry was actually like 5 minutes before New York session at this bullish order block. When price retraced down to here, my entry was there. Stop loss below this swing low, because I know if price took out that swing low, it's likely we're going to continue lower. My target was here at this immediate draw on liquidity. I could have held all the way until this trendline liquidity, right? But because it was a Monday, and again, I was anticipating some sort of manipulation, I'd rather just take it safe for a nice 2-hour trade. I believe I got filled somewhere here. So it was a solid 2-hour trade to start the week off. But if you wanted to, yeah, you could have targeted this overall trendline liquidity, because that was our overall draw on liquidity anyway, where we would anticipate for price to go to. Yeah, that was my original trade. And as you can see, it gives you a strong displacement higher. This was another entry that you could have taken at this imbalance if you had missed the initial trade. So if you waited until after New York session, you could have had an entry here off of this imbalance, stop loss below this. You could either target this immediate one or the overall draw over here. They would have still given you 2-hour trades. But going back to my original entry, you can see price takes that with ease. And if you keep playing price out, it hits your overall draw on liquidity in line with DXY's trendline liquidity, right? So you can see how simple I kept my trading. That's all you really need. Remember, the main goal in trading analysis is to determine how the next candle is going to open and close. And because it's so simple, you don't need a significant number of concepts to help you with identifying how the next candle is going to open and close. All it's simply doing is giving you unclear analysis, right? That's where you get analysis paralysis from. So, I hope you guys found this video helpful. If you did, please like and subscribe. If you have any questions or suggestions for future videos, please leave them below in the comments. And like always, take care, and I'll see you guys in the next one.